Hi, everyone. Welcome to our podcast, Discover AIG Multinational Latin America. I'm your host for today. My name is Alan Rodriguez. I'm the Regional Multinational Client Exec and the Global Fronting Underwriter for Latin America. And we have a very interesting topic today. But before we get to that, I want to introduce you to SP Med. SP, if you want to do a quick intro on your background, who you are for the audience.
Yes, thank you. Thank you, Alan, for the invitation. I'm excited to be here. I love your podcast. I have watched a few of them. I am an actuary. I am a fellow of the Casualty Actuarial Society. I'm a fellow of the Society of Actuaries, and I am a member of the American Academy of Actuaries. And I founded Actuarial Factor in 2014. And we are independent actuarial consulting firms that we do business in the United States, Latin America, and the Caribbean. And we do focus primarily in property and casualty insurance companies, as well as reinsurance, self-insured entities, and of course, captive insurance companies. However, in Latin America, we also do life and health, believe it or not. So I'm excited to be here.
Thank you for joining us. Today's topic, I think, is very important for captives, and we're going to talk about the role of an actuary within the captive space. And I always like to say that captives and actuaries are like bread and butter because you can't have one without the other. And why don't you share your thoughts around the importance of an actuarial role for a captive?
Alan, that's a great question. There are different aspects of the company that for the captive insurance industry that an actuary can help. Two of the major ones that I can think of is one is working on the feasibility study, meaning determining the prices for the coverages that the captive is looking to insure in the captive. And number two is the actuarial opinion that is required by the domicile that in credential actuary opines on the reserves adequacy of the reserves at the end of the year. Those are two critical functions. However, there is also the component is that an actuary can help the captive owner determine what risks to insure in the captive, or maybe what not to insure in the captives, right? Or what retentions to include in the captive. And then considering, we always tell our clients is not to insure everything in the captive because there may be, the limits may be excessive and they don't have enough capacity there to absorb all of them. So we may recommend maybe retain the first, 5 million that they are currently retaining on their own, basically no captive, whatever they're retaining now to transfer to the captive, and then buy insurance, reinsurance for the excess, and if there is a cat, if they're in a cat zone, to make sure to buy cat reinsurance. So I think we want to make sure that this is not like a cookie cutter that you can just say this is what you have to do. No, it needs to be addressed based on the risks that they're exposed.
Oh, interesting. And a little side question for you. When does an actuary typically get involved when in the captive space? Is it at the beginning? We talked about feasibility, but is it at the beginning? Is it midterm? Is it renewal time? Is it annual reviews?
That is a great question, Alan. We do get involved at the very beginning because the captive feasibility study is a document that is required by the regulators. And sometimes we introduce them to a captive manager, our client, right? And then they're like, okay, we can't do anything. You need this document. This document is really important. So if you don't have that document, you cannot start the process, So it's something that we have to work and have. And what the captive feasibility study is, for those of you that may not know, is basically a complete report of the documentation of how we come up with the rates. Okay. My very simple example that I have been telling this my entire life is for example, if you have $100 in premium that you're charging, right? $50 are for the losses and like say $45 for the expenses, you're left with $5 in profit. So although it does seem really simple, right? My main point is that it does need to add up to the $100. If the $50 in losses are not 50, but it is much higher, it will eat the profit and it may become an underwriting loss. So I think the reason capital owners need to hire an actuary is to ensure that we do a good estimation on the loss cost. That's the reason, because the expenses, you can just tell us we're going to pay this much in fronting fees, this much in expenses. So those are really easy to incorporate than estimating the loss cost. So I think that is really important. And then also it helps with submitting it with the once they have the draft feasibility study, then the captive owner, they can start getting fronting carriers like AIG to provide the fronting. And then once you agree upon providing the fronting for a fee, we can finalize the report with the appropriate fronting fee that you will be charging the captive. And we finalize that document. And once we finalize it, then the captive manager turns around and submits that to the regulator together with the business plan and all the other documents that are required to establish a captive. So, but they cannot move without first the feasibility study. But on the other hand, too, each year end, depending upon jurisdiction, and most jurisdictions require an actuarial opinion from a credential actuary that certifying that the loss reserves are adequate or are reasonable for the risk that the company retains.
Okay, interesting. And you talked about the loss reserve part, right? And why don't we maybe talk a little bit more about the importance of what an actuarial gets involved within the loss reserve part of a captive?
Yes.
Share your thoughts on that.
Yes, that's a great question. Is the loss research component, it is a document that it is also required by the regulator. It is a document that is an opinion, and that's usually submitted together with the financial statements with the regulator. Okay, so that's a year end only. If the captive is large enough that it's necessary to do more quarterly reviews, we can do that. But at the very minimum, they need to have it at year end to ensure that the reserves are adequate. So it is important to have a credential actuary and experience for that line in where you have the captive domicile. Okay, because what happens is, it did happen to us once. So we had an actuary which is really, really good actuary in Mexico. And she came to us and we were determining the loss reserves for a captive in Vermont. And she came and tell us, these are how the reserves are going to be. She gave us all the actuarial methodology, and to her credit, those were all valid in Mexico, right? So then we turn around, I'm like, okay, that's really good. That's good to comply with Mexico. But in this case, that's what your job. You need to comply with the local requirements. But in our case, for this company, we need to comply with the requirements of Vermont. So then I'm like, therefore, we have to do what we have to do to be able to do it. So, and I even send where we certify the reserves is we do say it must comply with the insurance laws, in this case, Vermont, but if it is Puerto Rico, Puerto Rico. And that is critical. Even if the laws, maybe say, for example, they are different than our actuarial standards, we have to follow the law. So that is very clear from our standards, to follow the insurance law of the state of domicile. And then in addition to that, we have to follow all the actuarial standards that apply to us actuaries in the US. And obviously, we also opine upon how reasonable the reserves are that are carried at the end of the at the year and their financials. And the reason we consider that very important is if the captive is having financial trouble and they don't book the correct reserves, right? And say, for an example, if actuary doesn't know and they sign that the reserves are adequate, they have a professional duty not to do that. And if they do, then the ABC, like basically the or actuarial profession will come and look if that company went bankrupt. So it is so important because we are, especially if the captive is insuring third-party risks, we need to protect the public. So we can be saying, oh, well, or sometimes they say, oh, it's so close to the range. Can you just say it's inside there? I'm like, no. So it is so important. And then that's the main reason, because essentially actuaries are independent. They're experts. They know what we're doing, right? So therefore, it's so important to have somebody that knows what they're doing, because otherwise they may say, oh, yes, we told the actuary what reserves to book. That's not the right answer. So I think it's so important to have somebody that have the proper credentials, the proper experience for what they're signing, because it's not just about the company. It's about the insurers, making sure that if they do have a claim, that they get compensated for it. So that is very important. So we're happy that most of the all of our clients, they let us do our job and we provide our expert opinion. But I think it is so important for the solvency of the company, to have adequate reserves. And I think the companies that have been in business for many, many years, like an AIG, like a Chubb, a lot of, they know the importance of it, and they don't play around with it. And also the other thing is it's so important to have experience in the proper line of business, because long tail line, it requires many years of reserves versus a short tail lines. So when I mean a long tail line, it may take 5 to 7 years for claims to start to come in. Whereas a short tail lines, it's much faster. You may only need a couple of years before the claim starts to come in. So it's so important, because if the actuary doesn't have experience with a financial line, they are not going to know. And if they have experience with commercial property, they're not going to be able to transition and know that even if they have no claims for 3 years, it doesn't guarantee that in the 4th year there's not going to be a claim. And therefore, they need to have the proper reserves.
Wow. Thank you for that insight. And it seems to me like having an actuary is not optional when you want to set up a captive. And it seems to me that there's a specific importance of the actuarial team knowing local regulation from the captive perspective, right? So you talked about this Mexico case where you had a Mexico client, but the captive is not in Mexico, it's in Luxembourg or Puerto Rico or wherever it might be, that the actuarial team needs to have visibility on that specific domicile, right?
That is correct. Because if they have experience in the local country, right? In this case, whether it's Mexico or Panama or Colombia or Brazil, those actuaries are needed and they're necessary there locally. But the moment that the captive goes to Bermuda, goes to Puerto Rico, goes to Vermont, or we need to comply with those laws.
What would you say are the challenges from your perspective to keeping up to date on those new domiciles? We've seen UK is setting up their captive regime. So does your firm have active efforts on keeping an ongoing education on how the local laws are changing on these captive domiciles?
That is a very good question. We are already admitted as a actuarial service provider in the top 20 jurisdictions. So that it is interesting because since I was coming from an insurance company, I never had to file anything in any of the states. Like, and we did business in every single state, and they were just all I just have to do is sign, and they will accept it. What it was interesting is when I when I came into working with captives, what I learned is that each domicile, most of them require for you to submit an application, has an actuary, and for me, and just me, but anyone in my firm needs to submit the documents, and they review it and they approve it. Fortunately, when I submitted back 11 years ago, all of the states are so nice that they immediately accept it. Like the moment that within a few days, like they accepted my application. So we are registered in the majority of the states. And in some cases, like a Bermuda, each time there is a new client, we have to submit the paperwork for that particular client. So I think as far as keeping up with the regulation is because the opinion states that we must comply with the insurance law of that particular state of what I'm signing, we do need to review to see has there been any changes since last year. Okay, so if there are any changes, what are those changes, and making sure that we comply with those. So it's not it is a requirement, and we have to keep up with the changes in the regulations. Yes, every year, every time we sign, that's what we're signing.
Wow, interesting. Coming to the end of our episode for today, if you want to share your final thoughts around the importance of the actuarial side for captives, any last words you want to share with the audience today?
Well, thank you, Alan. I think what's important is for when you're choosing an actuary, make sure that they have the proper credentials, that they have the proper experience in the jurisdiction of where you're planning to put your captive, right? In such a way that and I think you should also try to use your actuary not just for like doing the pricing, the captive feasibility study and the loss reserving, but I do think that the strategic view from actuaries that I think that we eat, dream, and drink insurance every day. So we are actually really good at risk management, right? And also helping you with the reinsurance, right? The captive may be able to insure a certain portion of your risk, but then making sure that you don't, you're you don't run the risk of being uninsured for especially catastrophic risks or higher layers of your company that may not be adequately reinsured. An actuary can help you in many, many different ways. And remember that the actuaries tend to be independent, they tend to be unbiased, and they will be giving you not what you want to hear, but what they believe is the best for the solvency of your captive long term. So thank you so much for having me here.
No, thank you. It's been a very insightful session for everyone. And I want to also thank our audience, invite them to follow us on our AIG Latin America YouTube channel, and stay tuned for our next episode around captives. Thank you so much.